You leaving already? Where are you going? This guy.
Tell what?
You really are a trained professional. Ladies and gentlemen, welcome to another all-new live edition of What Are Your Thoughts? My name is Downtown Josh Brown, here with my co-host, as always, Mr. Michael Batnick. Make some noise in the chat for Michael, everybody. Michael, say hello.
Can I make some noise for myself?
Yeah,
Josh,
let's do it.
I'm fired up for the show. You know, who was I talking to last week? We still love doing this. I was in the airport getting ready for the show, and I was thinking, turn my mic on. I want to do it right now. I'm fired up. Let's go.
Well, here we are. And the chat, I got to tell you, is especially lit today. I see a lot of new faces and names, a lot of old school day ones. Jerry Gould is here. Matt Stevick. What's up, man? Greg Jones, we see you. Possum Nation is back. Chris Hayes. Who else is here? Dr. Horton's here. You know it's going to be a good show. Jay Luther. Donna, hello. All right. I'd love to say hello to everyone individually. But
have we done this before? It's the Dr. Horton. This joke is not lost on you, right? That is Dr. Horton. I know you know that. Okay.
I love it. Akbar Muhammad, welcome. Thanks for joining us. Tom Lombardazzi. We love having you here. All right. We have a sponsor tonight I want to tell you about. A very special sponsor. You know them. You love them. It's public.com. Michael, what do we have to say about Public today?
Listen, here's the deal. Here's the deal, folks. All right, listen up. Cash. It's so 2023. Am I wrong?
It's over. I did that already.
The rates are coming down. The Fed is stealing your money. They're punishing you. The Fed is punishing you. It is time, folks. It is high time. It is past time. Get that money out of cash. Listen, I've been guilty. I had too much cash. I'm reallocating, okay? And bonds are there for you.
With public.com, you can allocate to what they call their bond account, locking in a 6% or higher yield if you act now. The way this works is it's not quite the same risk profile as cash. It's bonds. It's investment-grade corporate bonds. It's treasuries. But it is an off-ramp to holding too much cash. And if you want to lock that in, the time to check out public.com is now. And if you go to public.com/WAYT, as in what are your thoughts, you can learn a lot more. This has been brought to you by Public Investing, member of FINRA and SIPC. As of 9/26/24, the average annualized yield to worst across the bond account is greater than 6%. Yield to worst not guaranteed, not a recommendation. All investing involves risk. Visit public.com/WAYT for disclosures and more information. Okay. I saw somebody out on the front lawn, and I have a sneaking suspicion that
is he outside your house.
Here we go.
Now?
I had a feeling. Look who's here, guys. We have a very special guest with us today. Allow me to welcome in Mr. Caleb Silver, the editor-in-chief and senior VP of content at Investopedia. Everybody knows and loves Investopedia. Caleb, how are you?
I'm so good to be here. I've been out on the lawn since lunchtime. I thought this thing started 5 hours ago, and I thought it was catered, but good to be welcomed on inside. So good to be with you guys.
We're thrilled to have you. And every year, you guys do this thing in Investopedia where you take the most searched for terms and create a list. And we have a graphic of the entire list, which we'll show first. John, if you would. All right, so walk us through the list. These are the top 10 terms of the year on Investopedia.
Yeah, let me bring you through it. So we have millions of visitors coming to our site every month, searching up something or following a trend or a theme. And then at the end of the year and throughout the year, we look at what trended for how long, when it trended, sort of what instigated that, and how sustained was the interest. And there you have it, the top 10. No one's going to be surprised by 1 and 2, inflation and tariffs. That was the dominant narrative really this year.
I would have guessed that.
Wait, hang on. Sorry, I am kind of surprised because chart off for just 1 second, Caleb. John, so Caleb, the tariff part, that's only like the election was a month ago. So the volume of searches for tariffs must have just absolutely gone vertical.
Yeah, but they campaigned all year.
All year.
That's true.
All year.
Josh, you do have a good point.
Yeah.
all year. And don't forget, the Biden administration added tariffs on top of the Trump tariffs. So tariffs never really went away, but they got a lot of heat under them, obviously, when the campaign started. And the closer we got to Election Day, the hotter they got. And then since Election Day, you better believe they've been hot to trot in the early lead for 2025 term of the year. But inflation was obvious, but it was not only the dominant theme. First time in a long time, it felt like that was not only the dominant theme, and it was what we were thinking about in the investing ecosystem, but it was on the mind of voters, or they said it was on their minds when they went into the voting booth. So you couldn't knock it. You can't knock it when it's number one. It was number one from day one, January 1, all the way through to today.
Caleb, in the chat, Greg Jones wonders why Hawk Tuah didn't make the list. I guess they're not hitting Investopedia when they search for that.
Yeah, we're still copy editing that term, and it's going through legal and compliance.
I can understand.
It's still a very risky security.
One more for you. Basil Lomachenko wants you to know you look like Maury Povich, which is
I've
a
gotten that
compliment.
before.
God.
That's a
gotten
broadcast
that
legend.
before.
Yeah, it's
Yeah.
not bad.
I've gotten that before, and I would say thank you, but
Young
Maury's
Maury,
like
somebody
78.
hashtag Young Maury.
You are
I get Jeff
not.
Goldblum.
You are not the short seller.
I get Jeff Goldblum from time
Do
to
you?
time. I'll take
Do
it.
you? I would take that.
Yeah.
Anyone
I
would take that.
I'd take that height. I could still
sure.
finger roll.
So
I get
we,
powder.
we have a graphic for in term of the year inflation. We'll just throw this up. Do you think this will still be in the top 10 next year?
Probably, because I don't think it's going away. And I think if you think about tariffs and what they could potentially mean for inflation, if you think about a lot of the policies that the incoming administration has promised, a lot of them speak to more inflation. And even if you look at what consumer confidence looks like, they still think inflation's going to be around. We don't want deflation. We want a little Goldilocks of inflation. I think it's going to be there. Obviously, we got the Fed meeting coming up next week. But what the future of the Fed is going to be interesting. Is the Fed going to be looking at that going forward in the Trump administration? All these things are up in the air and fascinating, and it's interesting to see how people dive into our terms, but where they go once they get into that term is also pretty interesting, because a lot of people went into the inflation term and they were searching for it to make sure they understood it, and then they started looking at inflation by president and what was the inflation rate during Trump's presidency. Right. They were doing a lot of comparisons. So the educational journey for us is fascinating to watch, and if you looked at some of these other terms, there was some interesting stuff popping there that some things you would absolutely.
So let me ask you about
NVIDIA.
that. Let's talk Nvidia and stock split probably being searched for the same reason, right? Wasn't Nvidia's big split this year? Mm-hmm. I know they've done
Nvidia
a few.
had a big split. Walmart had a
Okay,
split. I think there was over 300 odd companies that had big stock splits, and you had a couple hundred reverse splits. But Nvidia was the big stock split.
But you have a
that got
chart
everybody talking about.
So I'm sorry to interrupt. You have a chart that shows when these terms bubbled up, and it looked to me that the Nvidia stock split coincided with the search volume for split.
Absolutely.
So that was okay. That's a big story. Everybody owns that stock. It's the biggest company in the world, and a lot of people may not have. It's a lot of young people, I assume, that have never owned a stock going through a split, and they want to know what the hell is going on.
Right, and for a lot of people who don't understand that you could buy fractional shares, or maybe they don't have a broker that allows it, the price tag on a stock like Nvidia pre-split was way out of reach, right? So I think a lot of people were learning about what that actually means, what it means for value creation. I think that's fascinating, especially for young investors who a lot of them were probably looking this up for the first time. Once you know it, you know it. But a lot of people were learning this for the first time. That's good news, right? We love that.
Yeah.
But it's also rare to have a company be on the top 10 of our terms, but NVIDIA is just so big, it made its way up into the top 5.
I mean, it's definitely the story of the year. Once again, it was last year. It is this year in terms of like individual stocks. I want to drill into one of these before we let you hop, because I was surprised to see this. Throw that top 10 up one more time. Moneyline bet. So why do you think people are landing on Investopedia to learn about moneyline bets, and why is this an investing topic to begin with?
Well, isn't it so interesting that this was one of the first years where you could bet on the presidential election outcome before this year, but it was the first year where it kind of became mainstream, and it turned out that the betting markets, if you look at Polymarket and you look at even the betting that was going on in Robinhood and overseas, actually was a little bit closer or even on the money compared to polling. So a lot of people, the betting culture is big, obviously, through betting on sports. But I think this is what the first year we saw this crossover. And I was talking to Kyla Scanlon, good buddy of ours, real smart financial explainer out there. And she said, this is really the beginning of this meshing of betting, investing, politics. It's all coming together in this weird
think that's
tapestry
true.
right now. And there's no backing out. People love
Caleb,
betting. They love watching people bet.
You saw that there is talks that Robinhood is going to allow sports betting on the app, and of course they are. Why wouldn't they? It's a great idea.
Yeah.
It's the same people.
Right. Exactly.
It's the same people
why
are
leave
doing
the app?
one or the other.
Yeah.
Right.
Can you
What could
wait?
go
Can
wrong?
I money line whoever the Giants are playing with a parlay of Nvidia options that expire on Friday? Let's fucking go.
Write that down. That's a great idea. What are we going to name this company? Let's book it right now. That is a terrific idea.
Look,
right there. Why
Robinhood
not?
has millions and millions of daily actives, people that log in every day to see what's going on with their account, and it's a safe bet. If somebody is very aggressively trading options on Robinhood, they probably also have a BetMGM account or something where they're also betting games. If they can do it all in one app and not have to move money around, I see that as being something that will get adoption. And in the early days of Robinhood incorporating crypto, which they did almost from the beginning, I said to myself, it's like somebody that trades a lot of stocks probably is also trading crypto. So of course these things make sense.
It's obvious, and this is
Yeah.
this is the direction we're headed in, and we think we'll probably see money line popping again next year because you can pretty much bet on anything right now. But I love Michael's idea. Mix it.
You know what's going
all
to pop
up.
in? Parlay. First year it's
Yeah.
money line.
Yeah.
Next year it's parlay.
Next year-
Yeah,
parlay,
it's only
right,
going to
right.
get more extreme.
Right, there'll be
So-
points now, and people will be learning about integers finally again. So this is a return to our algebraic roots.
Like the second time somebody wins a sports bet, the third bet is a 10-team birdcage. And it's just all right, Caleb, we're going to let you go, but I wanted to say thank you so much for stopping by, and thank you for all that you've done throughout the year. 2024 has been a great year for Investopedia and for you personally, and it's just so great to have you in our orbit. Thank you for stopping by, and let's tell the folks they should go visit Investopedia.com and read more about the list for themselves.
Yeah, thank you. The honor is mine and ours, and it's my honor to be the editor here and to be buddies with you guys. Thanks for having me on the show. Let's go, Knicks, and have a great rest of the year.
All right,
All right,
and
Caleb.
don't let the dogs out on your way out. Those are they're indoor pets. All right, all right. Let's goodbye, Caleb, and let's get into topic one. Michael, this is yours.
All right, Josh, I want to talk about what's happened in the stock market the last 2 years, what that might mean for 2025 as the calendar turns over and we start thinking about what might be possible for next year. So 2023 was a year where famously everybody came into the year bearish. Consensus was bearish. Stock market S&P 500 expectations, the average was negative, which had never happened ever. And of course, the market did the exact opposite, fooled everybody, was up 20%. And then you come into a year like today, like 2024, and boom, even more gains. Wonderful. So up 20, now we're up 30. What's next year going to be like? So Ed Clissold from Ned Davis Research pulled out an interesting stat where he looks at what happens in a year after there are 50 record highs in a year. Now, not a tremendous list, but it's not great. The average is negative 6%. The mean is negative 3%.
Oh, wow.
Only positive 28% of the time. It's you generally have this type of year in what's known as a blow off top, where all of the good news is being pulled forward. Obviously, we hope that's not the case for next year. But what's your knee-jerk reaction to this sort of table?
Well, I lived through a bunch of these years, 2014, 2017, 2021. They didn't all feel blow-offy at the time. Like I could specifically describe the experience of 2014.
They were still down.
It was a grind higher though. 2013 was amazing. Yeah. And then 2014 was really just the market consolidating its gains and inching higher. But the thing to remember is that 2013 was the first record high after the 2007 peak of the prior bull market. And this year looks nothing like that. So I just always, when I look at these types of stats, I want to know them. I want to be aware of them, that the likelihood is negative. Is that what we're saying? Or what did you do? The median return?
You're not saying likelihood. All we're saying is historically. It says nothing about next year.
Historic probability.
Right.
We're saying the median return for a year like 2025 given the fact that we've just had 50 record highs this year. The mean return is 3% and the median is -3.
That's exactly right.
And the median is -6.
So the next chart shows it
And
visually.
2/3 are negative.
Yeah.
I mean, it's not great, but
It's not great.
Thank God you have a sample size of 10 and not 10,000 years.
So I
guess.
was talking with Ben today in Animal Spirits about this, and I said, I really do not want another 20 or 30% up year in the stock market. Not because I don't want people to make money, of course, but we all want to make money, but because I don't think that would be helpful, and I think that would potentially set us up for something really nasty. Unless, huge caveat, I think what would be wonderful is if the S&P 500 gets a 15% earnings growth, and you get more margin expansion. If that's the situation and we get a 30% year, hallelujah, that would be wonderful, right? We'd all take that. What I don't want to have happen is you have more multiple expansion, more hype being pulled forward. Nobody should want that.
I always think of this selfishly in terms of like what we're doing at the firm at Ritholtz Wealth. The way I think about the markets in the context of our business. Yes, of course, when the market goes up, clients make a lot of money, we make more money. But I think of like a plane that's flying around the world and it has to land periodically. And when the plane lands, whatever empty seats you have on the plane, you got to fill those seats. And we did that in 2018 when the market was effectively flat with two big corrections. Yep. We did that in 2022. The market was down 18%. Bonds were down 16%. We onboarded so many clients in that year.
Pick them up.
And then the plane takes back off and you have
Right.
more seats filled.
Right.
And it's just like, it's so selfishly. Like, yeah, it's great. We're allocating. Everything's working fine. I don't mind I don't need 2022. I don't need to be down 18%. But like, I almost feel like, let's fill some more seats in the plane. Let's come in for a landing. Flat market, -5, -15. It's survivable.
Please, yes.
And nobody wants to hear that, obviously. But the thing that I want everyone to hear, years like 2022 are the years that set us up for 23 and 24. Mm-hmm. We're up massively in 23 and then again in 24. And you don't have that if you don't have that 2022 setup.
Correct.
And the deck's being cleared. You need earnings estimates to come down in order for stocks to rise when they get ratcheted back up. Like you need that plane land moment. Plane just can't keep flying forever. So I'm kind of cool with next year not being up 30%. I'm sure it will. No, I want to show you one more thing on this topic. It's only sort of on this topic. I couldn't ignore it. It's
okay.
We don't have to spend a ton of time on this. John, pop this Bloomberg article up for me. Chasing dumb money. Hedge funds target mere mini millionaires. I mean, this is like I know we don't believe in like headline macro. Like we don't do magazine cover. This is fucking crazy, right? Who talks like this? I don't know the authors of this.
Explain what's going on in the article here. I don't get it.
Hedge funds are going down market for their next pot of money. Quote, mini millionaires. Can you imagine the nerve? The trend to attract doctors, lawyers, business owners, or anyone with 7 or 8 figure fortunes has been gaining velocity as the usual hedge fund clientele of big institutions and the ultra wealthy become more reticent. All across Wall Street, velvet ropes are coming down.
Stop right there. That should tell you all you need to know. This is just like, I think we're good here. Why don't you give it, well, pass.
Please land the plane before these mini millionaires are completely fleeced. You know what this sounds like to me? All of the traditional hedge fund clients have buried all their money in private equity and private credit. So the long short guys are like, call some dentists, I guess. But they cite some examples, big funds like Viking and like some name brand operators, Elliott, Jane Global. These are not bullshit funds. They are setting up new vehicles where they can take $50,000 checks from the millionaire next door. Here's my comment. Have fun with that in the next bear market. I don't exactly think these hedge funds are equipped to take phone calls from people like this. I also think God knows how these people are being sold. If they're looking at historical track records, which of course they are, probably some disappointment coming up. So that's the latest. But I thought of that headline, couldn't be ignored. I want to show you two charts from Ari Wald at Oppenheimer. Ari put out a note this weekend screening for new momentum, and I thought this was sort of notable. So he's saying, where's the momentum? We reiterate that the momentum factor typically outperforms in the period between the cycle's broadest moment and its final peak. This week, we screened for new momentum coming into our calculations in September, along with a new all-time high for the S&P 500. Notable action last week included the high beta versus low volatility ratio's ability to reclaim its 200-day moving average for the first time since July. He's using this as a proxy for cyclical versus defensive equities. And what he's basically saying is this is a good sign because people are going into high beta and people are buying the cyclicals. And the next chart, I'm just going to show you one versus the other. Do we have that second chart up? Let's see. Yeah. Cyclicals and defensives rallying together. So although cyclicals haven't recaptured the relative losses endured between July and September, we reiterate Q3 leadership was catalyzed by an LV breakout rather than an HB breakdown. So it's a catch up, not a catch down. He's saying the low vol names are catching up to high beta. That ratio is not changing just because high beta is falling, because it's not. And so I think when you have participation this broad, and you have both styles of investing working at once, it augurs well, at least in the short term, for momentum being okay. Now, he put this note out over the weekend, but you know what happened yesterday? High momentum did sort of break down. I don't think it's technically broken, but the MTUM ETF was down 2%, and all of the biggest winners so far on the year were negative big time. So here's my question, is that the beginning of a high beta / high momentum breakdown, or just a blip along the way? What do you think?
Well, the answer is, of course, we don't know, but I will give you my opinion.
What do you think?
And I will give you my opinion.
The show is called What Are Your Thoughts?
Give you my thoughts.
Okay.
And my thoughts are that nothing goes straight up forever, and this is necessary and healthy. We do need pullbacks along the way in bull markets, and I think that's all that this is. So,
bro, they took AppLovin out to the lake and ripped its throat out like Patrick Swayze in Roadhouse. I mean,
not bad. I mean, but that stock's up what 300% in the last 2 weeks. You know what I mean? I mean, I'm exaggerating, but good.
Yeah, the Chasers got paid. The Chasers got paid yesterday.
It's a little, yeah. Listen, the market has to keep you honest. It's all. I'm not speaking to AppLovin specifically or any of those stocks, but like nothing can go up forever, and so I view all of these slap on the wrist as healthy and necessary, and this is what the market does.
Micro GX in the chat is saying we need a 10% pullback or some sort of reality check. Benjamin Lupu reminds us NVIDIA is now down 11.8%.
The reality...
What constitutes a quote-unquote reasonable pullback for momentum stocks?
Listen, I don't know.
I think it's like 20%, honestly.
It depends on the stocks. It depends on the stocks. You're talking about Apple and NVIDIA, or you're talking about AppLovin. These are different companies. But the market, the reality check is that earnings are at an all-time high. So I think that the market is behaving as it should. Are areas like AppLovin extended, and of course, should they get slapped? Yeah, of course. But yeah.
You know what held up? 3 really important names. Alphabet, which now looks good again. How do you like that? Apple is knocking on a $4 trillion market cap. Stock is it's like 250. It's a freight train. No one could explain it. They think the AI was a flop. They think the phone is a flop. It doesn't matter. The stock's going higher. And Amazon is the best looking stock in the entire S&P 500 right now.
Yeah.
Which we did make the case on, both of us did. But that stock just is, it's untethered from the Earth's gravitational pull.
By the way,
did not come in with the momentum stocks.
RSP is having the sort of that's the equal weight. It's having the sort of pullback that you can only dream of. It's like a severe, strong super strong uptrend, and then you've got like a little drift lower. I think it's down a couple days in a row. Nothing major, but this is you love to see it. This is you got to take one step back to take 19 steps forward. Anything else here, Josh?
We didn't mention Tesla. Tesla is both high
Rocket
beta
ship.
and mega cap.
Rocket ship.
Yeah, I mean, I guess like if you were ever bullish in Tesla, right now would not be the time that you would be unbullish. The guy is pulling the puppet strings.
Yeah.
For as long as that goes for, it seems like that's going to be pretty good.
One of the top 2 influential people on the planet. Yeah, so the stock is working. Okay. Here's a something from BlackRock, their 2025 outlook that Josh, who did you ask about this? Was it Dr. Kelly, Sembalist? Who did you ask about this?
I asked Dr. Kelly of J.P. Morgan
And he
on
didn't
the
dis-
Compounded
he
Friends.
did not dismiss you.
So I said, are we in a post-cycle economy? Not that we're not going to have ups and downs, but like we did a chart. Chart Kid Matt made this for us. He was showing recessions and he was showing the manufacturing data. And then I said, why don't you overlay that with a chart of how big manufacturing is in terms of the overall economy? Manufacturing in the last 50 years has declined from being 20% of GDP to 10. It's cut in half.
Right.
So tell us what BlackRock had to say.
All right. So before we get to this, I think just because you asked the question, are we living in a post-cycle world? And just because BlackRock is about to argue what we're about to talk about, I don't think you nor I nor BlackRock is saying recessions can't happen. That's not what they're saying.
No, that's not what we're saying.
What they're saying, and I think we agree with, is that and man, it is hard to say this out loud, but the boom bust nature of the cycles, that part of the cycles might be a thing of the past. So enough throat clearing. Here's what they said. This is from BlackRock. We have argued since 2020 that we are not in a business cycle. By the way, I don't remember reading that in 2020, but fine. Let's just assume that they did. Historical trends are being permanently broken in real time as mega forces like the rise of artificial intelligence transform economies. The ongoing outsized response of long-term assets to short-term news shows how unusual this environment is. We stay risk on as we look for transformation beneficiaries and go further over what U.S. stocks as the AI theme broadens out, end quote. Josh.
He said all that just to say buy the Max 7.
So Josh, somebody built us this really nifty website where you get to hit a button and it pulls an old chart from podcasts that Ben and I have done over the years. And I was playing around with it. New chart. I'm like, holy shit, this is wild. Like, it's a walk down memory lane. And we shared one chart on animal spirits today that's going to come out tomorrow. And this chart was from 2018. And it was basically a recreation of the famous pie chart that I created. And it showed, again, this chart was fucking 6 years ago at this point. It showed the weight of the top 5 stocks in the S&P 500 compared to the weight of the bottom 50. And this chart showed them touching each other, just the tips. And at the time, myself and Ben and the rest of the world were saying, you gotta be kidding me. 5 stocks? 5 stocks are equal to the bottom 50%? You think this makes sense? You want to be long this market? And here we are, Josh. It's, I don't know, 67, 60, I don't know. I'll update the pie chart. But here we are, dude, 6 years later, we're still having the same sort of conversation. BlackRock also goes on to say, mega forces are reshaping economies and their long-term trajectories. It's no longer about short-term fluctuations in activity leading to expansion and recession. 2024 has reinforced our view that we are not in a business cycle. Now, listen, I don't like this either, okay? I know exactly how this sounds, but you really do have to balance this with, like, you guys sound so toppy with the fact that these guys have been talking like this since 2018, and maybe shake off the cobwebs and understand and see what's going on. This shit is different, okay? There is I was thinking about this weekend as I'm watching The Agency, my favorite news show on Amazon.
Oh, I'm in.
Okay.
I'm in.
And I'm thinking, we don't even talk about this anymore, that like Amazon and Apple and that all these companies are now controlling the media too. Like we just take it for granted.
Yeah, because we've become accustomed to it. Here's what I would say: nobody is suggesting that we don't have the potential for recession. We're talking about the source of the next market crash.
And the booms and the busts.
Listen to me, is coming. We're talking about the source of the next recession, which is coming. It's unlikely to come from the types of cyclical drivers that most economists follow. It's unlikely to be an issue of automobiles piling up on lots.
Too much inventory.
And
that
layoffs
shit's gone.
at factories.
That shit is gone.
That's not what we're doing now. That's just.
But
that's
also, Josh, I want to let you cook, but just one thing on this. There's also, we have too much data. These companies know too much about their customers, the business cycle. There won't be this sort of, to your point, absent the pandemic, obviously, this gigantic glut or shortage of too much or too little of inventory because we couldn't see something happening. So back to you.
I'm going to say it's going to be a global macro thing that nobody sees coming, like a pandemic or a war that has the potential to drive the recession, because it'll be unexpected enough that no preparation that companies have done will be enough to save their earnings power. Right. That's where it's coming from. It's coming. We're not saying, oh, there's no more negative, there's no more bad times. The point is, if the things that you're following have anything to do with ISM surveys, you already don't get it. Because, or you have this belief system where you think that companies haven't gotten better at forecasting, or companies haven't gotten better at just-in-time delivery. Like, companies know better than companies did 50 years ago.
It's all software. They could turn it up and down in 2 seconds. So, all right, here's Megaforce Exhibit A. So from Sundar Pichai from Google, Alphabet. This was yesterday, introducing Willow, our new state-of-the-art quantum computing chip with a breakthrough that can reduce errors exponentially as we scale up using more qubits, cracking a 30-year challenge in the field. In benchmark tests, Willow solved a standard computation in under 5 minutes that would take a leading supercomputer over 10 to the 25 years, whatever the fuck that means. That sounds like gazillions.
It's a septillion. It's septillion years,
Okay.
Which
that's beyond the age of the universe.
It predates the age of the earth. I'm going to tell you right now. Let's put up this golden octopus, ladies and gentlemen. This is the buzzword of 2025. Okay, you heard it. Maybe not here first, but relatively first. Do we have this picture, John? You see this thing?
Okay. I'm long. I don't know what this is, but I'm in.
This is a quantum computer. Google does not have the only one. IBM has one, and several other entities. Chart off, please.
Wait, is that real?
Yes, that's what it looks like, but you wouldn't see it in that form in a laboratory because it will be encased in a outer shell that keeps the interior at the same temperature as outer space. Because quantum computing is effectively turning electrons, turning molecular material into ones and zeros, where it differs from, so traditional computer, you give it instructions of something that you want solved, and it will complete operations in order. They'll try this, until it gets to the answer. And that's why you could take septillion years to calculate something algorithmically. What we're doing, and that's using bits, and bits are pieces of silicon. What we're doing with that chandelier we just showed you is we're using qubits. And I'm not a scientist, but qubits different than bits. Bits are ones and zeros. Qubit can be either or. So people are joking around. It kind of exists in an alternate universe. Each one of those pieces of material that we're using to compute can go either way. Think of a highway with cars driving in one direction or the other, being classical computing. Quantum computing, the cars are going in both directions at the same time. And that is how they are arriving at the end of these calculations faster. And the meaning to the economy, if you're one of these people walking around thinking that you know, my God, we're talking about, I know crypto is the first thing people are worried about. Will these machines be able to break the algorithm? I couldn't tell you. Some people say yes next year. Some people say never. The real stuff that we're talking about is creating drugs that enable us to live forever. And you want to tell me about business cycles?
Yeah,
in the
Josh.
face of
Josh,
this.
you know what? What's that De Niro meme? And you're laughing. What is that from? Do you know what that?
What?
Like, they've got septillion things years here, and you want to short the market?
Well, look, we will overpay for these stocks ultimately. And,
Of course.
All right. Here's what I'm going to tell you. Google's Willow completing that calculation in under 5 minutes. By the way, Google announced that they had quantum computing supremacy in 2019. This is not like some bullshit they pulled out of their hat to excite everybody.
Us too? Right.
No. That's number one. Number two, what you can do with quantum computing is simulate nature. Okay? You can literally simulate nature. So we have no idea what this is going to mean, but what we should do is not have the arrogance to say, nope, according to my historical economic model from the 1900s, I'll tell you exactly what stage the economy is in. That's all we're saying. Be humble, not be so sure of yourself at a moment like this, because it's very difficult to understand the impact something like this could potentially have all over the world. So in 2023, early in the game, if you understood that AI was about to lead to this massive CapEx boom, you were way ahead of the game, even if you didn't buy enough. I think what you're going to see now is people say that quantum computing is the key to unlocking the true AI, and you're going to see people look for ways to make money from this. And you could sit on the sideline and say it's all bullshit and what do you mean simulate nature? Or you could be curious.
Yeah.
I'm very curious.
Josh, on tomorrow's Animal Spirits, Ben and I take a trip down memory lane when we, the three of us, were rightly questioning the luminaries of our profession, of our industry back in 2017, talking about the CAPE ratio and saying, you guys are looking at companies that made belts compared to today. And we feel very much vindicated.
You know what, dude? I'm wrong about a lot of stuff throughout the course of the year. Every year, it's totally fine.
We got this
I own
right.
my L's, but for the last 12 years, we've been pissing all over the CAPE ratio talk, and we got that
one right.
So incredibly right. Okay.
Yeah. Wait, last one. What? Just two more charts. Let's just two more charts.
Oh, do it.
All right. So the Google, real quick. All right, we know Google's acting better.
Yeah. Look at this. The people like quantum computing, it turns out.
Yeah. Okay. So here's another one just to support this whole type of dynamic of where we are, what type of economy we're living in. This is a chart of the S&P of materials divided by the S&P 500. So, of course, the S&P is at an all-time high relative to materials, is said differently. We don't need materials anymore. And I'm being facetious. Of course we do. But my point is, this is not a manufacturing-based economy anymore that is so prone to booms and to busts. All right, that's it. That's the last thing I want to say.
Did you say the booms and the busts?
The booms and the busts? I might have.
All right. Materials, interestingly, might be one of the first areas where quantum computing makes a tangible impact in our lives. This is about battery science. This is about creating new versions of existing products that are more durable, more sustainable. Because what they're essentially doing is manipulating chemistry in order to do this sort of computing. And when we talk about simulating nature, materials science is probably going to be one of the first applications for this sort of thing. So my suggestion is stay curious and don't listen to people who have economic models on an Excel spreadsheet. They don't know shit either. And that's gonna save you a lot of time and aggravation. All right, can we talk about the Tuah token?
Yeah, I don't know the story here, so please enlighten me.
I'm going to tell you the story. You're familiar with the lady?
I sure am.
Girl?
I'm a fan.
I don't hate her. Social media influencer launched a cryptocurrency because, of course, she did, called Hawk, which crashed by 95% in value just hours after its launch. Who could have seen that blue chip wiping out and wiped out retail investors? The crash has led to accusations of a pump and dump scheme, with evidence suggesting that insiders offloaded their stakes, of course they did, for huge sums, and buyers quickly amassed and unloaded coins for instant profit. Welch, her name is Haley Welch, and her team faced criticism for their handling of the situation, with some calling for her to take accountability for the harm caused to her fans who lost money. The incident also raised concerns about influencers entering the crypto space without proper understanding and due diligence, putting their audience at risk. I have a problem with every one of those sentences I just read to you.
Me too. Her fans should thank her for teaching her about risk and reward. She should say you're
What
welcome.
are they her fans for? The fans of what? Her music?
Right.
Her poetry? Okay, so that's one. You're saying I'm a Hawk Tuah fan? I mean, what you dropped on your fucking head? Okay, that's fine. Second, face criticism for their handling of the situation. What is the situation? She dropped a crypto coin, and you thought it was going to result in what exactly?
Wait, did you say the words due diligence in that paragraph?
Literally. What is going on? It's
Due diligence.
Yes. People who
What do you think it's backed by? Her saliva?
Yeah, no, we need due diligence. This is the biggest problem in the economy right today. We need due diligence when it comes to securities being issued by people who got famous for spitting on genitals. I cannot tell you how paramount this should be in the regulatory regime coming up. Look, this is like, to me, nobody is like seriously buying this coin with money that they need.
No.
Everyone's in on the joke, right?
Yeah, yes.
Okay. So all this hand wringing, like, oh, she did this irresponsibly. Is there a responsible way to do this? And should there even be?
This whole
Can we
thing's
just
a joke,
have
right?
fun?
Nobody's actually mad about the coin going down. I don't
Oh, you think so? People are performatively angry on social media, as they always are.
About what? A coin
I don't
going
know.
down?
I don't know. Oh, this is funny. Wait, this is the last thing. Being a meme herself, it was perhaps inevitable that crypto entrepreneurs would see the opportunity to leverage Welch's brand for a new coin in a similar vein. And so on Wednesday, get ready to laugh, she and a team of advisors launched Hawk on the blockchain platform Solana while promising that it was compliant with securities laws and not a cash grab. If it's not a cash grab, then what is it? It's a joke within a joke within a joke? What? Of course it's a cash grab. And then you buy it and you tell people, yo, look what I just bought. And she gets the money, you get the lulls, and everybody moves on. I mean, am I saying anything that's not true? Hello? All right.
I am without words, dude. There's nothing. What? Yes.
Okay.
Sure.
Michael, would you like to disclose your long position in Hawk to the audience before we move on?
So I'm one of those disgruntled customers. How dare she?
Customer.
How dare she? Yeah.
This is kind of funny.
This is great.
Kino Pravda in the chat said Michael Saylor announced MSTR bought $1 billion of Hawk.
Sure.
Sure. Probably
Why not?
did. I don't know.
Why not? Okay. Last topic. Let's get a little serious here. So, by the way, shout to Andrew Voss Sorkin. I listened to Alex Cooper, Jerome Powell, Jeffrey Bezos, and
List all of them.
And Ken Griffin. Phenomenal. And I was telling, again, Ben and I spoke about this briefly, just very uplifting. I felt inspired by these conversations. Like, there's so much garbage negativity out there, but there's so many people doing so many incredible things that it was hard.
So for the audience, you're talking about the Dealbook Summit, which they made available every one of these interviews as its own 20-minute or so podcast.
On Spotify. Check it out.
Bezos went for an hour. Yeah.
It's phenomenal.
Sam Altman was good.
Oh, Sam Altman as well. Yeah, it was great.
Yeah, I thought Andrew Sorkin is an incredible interviewer and journalist. And if you like listening to podcasts, this is as good as it gets. So.
Yeah, it's really, truly worth your time. Better than this garbage that we're talking about. All right, so anyway, Jerome Powell said something, and it was like the, the Leo scene.
Yeah. Gotcha.
Like, that's how I felt listening to this. So if you'd all just bear with us and stick around for a minute. John, clip, please.
Curious how you think about that, which is this idea of communicating, and some people, by the way, would argue over-communicating in terms of the way the Fed approaches its job today. Sort of post-financial crisis, there really was a move to try to tell the public what was going to happen, to try to tell everybody where everybody thought the Fed was about to go, and whether you think long-term that has helped you, or long-term whether you think that has to be rethought.
So go back 50 years, and central banks were mysterious, and there was a lot of lore that was the right thing to be. Then there was a bunch of academic research by people like Alan Blinder and others, which came to the view, which is, I think, clearly correct, that if the market and the public understand how you will react to incoming data, then they'll do your work for you. So today, when some economic event happens, markets adjust immediately, long before we take any policy action. So that's the whole modern theory, is to be as transparent as possible. And we've greatly increased transparency. People do make the argument that, enough transparency, maybe it's too much. But I think generally the overall trend over 40 years of history has been very constructive.
So I think you and I both didn't agree with all of the policy decisions that Powell made, but what an incredible, in my opinion, public civil servant, the work that he's done over the past 6 years, however long he's been in office. But this remark in particular, we've spoken so much about this over the years, how transparent they are, how they're not going to shock the market. But to hear him talk about it, I thought it was so awesome. And you think about, look where the 2 years compared to where the Fed is. They're behind the curve. Yeah, they know. They're letting the market do the work for them.
I'm on the other side of you on all of this.
Interesting.
Yeah, I don't think he's done a good job at all. And I think if he were
hold on, at all. Go ahead.
No, I think if he were grading, if he were a professor and the Fed and another Fed chair was running this and it was his student, I don't think he would give that person an A. Like, I think if Powell objectively were to look at what the Fed has allowed to go on, inflation is so incredibly negative for not just the economy, but for society. This country is fucking tearing itself apart. We have people assassinating CEOs over the cost of healthcare in the streets of New York.
Time out.
Nope. It never had to get this bad. The Fed was stimulating, knowing that there was a fiscal stimulus taking place right alongside them. They continued to buy mortgage bonds, which kept the housing market absurdly unaffordable. It made no sense at the time. They saw transitory elements within inflation and assumed the rest of inflation would also be transitory when there were secular reasons for why inflation would be sticky. And I just don't think, on balance, Powell's going into the Hall of Fame. I'm sorry. I think he works hard. I think he means well. I think he's well-intentioned. I don't think past Fed chairs, if they come back from the dead and look at what the central bank had been doing over the last 4 years, would be like, oh yeah, well done, high five. I just don't. And Volcker is dead, so we don't know what he thinks. But take a guess what he thinks.
Wait, dude, hold on. You and I both were critical of Jerome Powell before
in real time.
In real time, okay? We were critical of him continuing to buy mortgage bonds in real time. Before he raised rates.
Brian Deal in the chat calling me Monday morning quarterback. Listen to Michael.
Listen. Josh and I, go back. Josh and I were both yelling, why the fuck are they buying mortgage bonds? What are we missing? So we were critical of him then, and we were critical of them for not raising rates until March of 21. Jesus. And also, we were critical of them for keeping rates for high for so long. So I am not here to defend his record.
One more thing. You were very impressed with his explanation for why they communicate so much and how they try to use forward guidance to get the markets to fall in line. Well, I believe that he believes that's true. Unfortunately, it actually does not work that way. He comes out and says, we're not considering a 50 basis point rate hike. Then he does 4 75 basis point rate hikes in a row. Okay, he has no idea what he's going to do, is my point. That's number one. Number two, not only does the market not fall in line after the Fed does what it does, actually, the market forces Jay Powell to do something that he's been saying he wasn't going to do. And I'll give you a great example. Think about 2018. In the first half of the year, all we heard about was rates are going higher. Then in the second half of the year, he continued to say it, and he came out toward the end of the year and said, we're nowhere near normal, like where the rates were going to be. The stock market crashed so fucking hard into Christmas. I promise you, the president had him on the phone. What the hell are you doing? And within 2 months, he had completely reversed himself. Not only were we very near normal, he started cutting. We had 3 rate cuts in the first quarter of 2019. He does not utilize forward guidance the way he thinks he does. He follows what the market is telling him he has already gotten wrong. And I think he's done the best he can in a really tough situation. No Fed chair in modern ever has had to face down a pandemic. The Fed is, remember, 1913. So it's not something that anyone's ever had to deal with. But he really did not, in my view, merit this kind of, Jay Powell was right all along. It's been an absolute roller coaster for the average household that literally, it's not a meme that they can't afford groceries. They actually can't. Not all of it is his fault, but he certainly didn't help matters. And I think that that's the way we're going to remember this particular period of time.
All right, so I didn't think this would turn into a comment on Jay Powell's legacy. I was merely talking about that soundbite, and I think you and I both agree that, all right, we don't have to relitigate this, but I do think that Jerome Powell was dealt a hard hand. I think that he made a lot of wrong decisions.
Yes. And I wouldn't have done better. And I wouldn't have done better. And I don't belong in that seat. I'm just saying the idea that he's using this transparency the way Alan Blinder intended it with an op-ed 10 years ago. You know what? It's too much talking. Way too much talking. Too many people talking is another problem. We don't need 12 of these people running around making speeches, contradicting each other all over the country. I'm one of these people who's been around long enough to have seen both versions. I remember when they didn't say shit, and now they're saying way too much, and probably the right amount of transparency is somewhere in between.
All right. Make the case. And by the way, I don't think you and I are definitely not saying. I don't think anybody's going to say that Jerome Powell belongs in the Hall of Fame of Fed chairs. Nobody's saying that.
You seemed pretty laudatory coming out of that clip. You were like,
I thought it was a good clip.
If we had another 10 minutes here, I would make you reconsider. All right.
Hold on. No. Fuck that. I thought it was a good clip. I am not going. Do not put thoughts into my brain. You and I was screaming at the time about him buying mortgage bonds, and I was screaming at the point about him, what is he waiting for not cutting in June? So let's not play revisionist history. I am not putting Jerome Powell in the Hall of Fame. I like the clip.
We agree. I like the clip too because it really let you in on how he thinks about his role. Unfortunately, I think he does think that. He's missing the bigger picture. And I have to tell you, when Biden passed that absurd stimulus package a month
called
into
what?
his
The
presidency,
Inflation Reduction Act.
but it was $1.7 trillion of new spending.
Yeah,
that was the signal for the Fed.
It was a joke.
The Fed is not in charge of that, but the Fed has to react to that, and they did not. And everyone knows it, and it'll never change. Yep. Can I pitch you a stock?
Please.
Chart on. You know what this company does?
Hold on. I need to make my screen bigger because I am on dual screens. Let's see. What is this? Emerson. Oh, yeah. That's no, I don't know what it does. It was a utility.
They do the Internet of Things, SA. And let me tell you one other thing about it. This used to be an industrial. This is a company that is transitioning from industrial to technology right before our very eyes. This is one of the best, almost pure plays on robotics and automation. And this stock has broken the hell out. I love it. I don't own it. I think it's going to consolidate this massive gap.
It is.
I think it's going to hold the gap. And if it does and allows those moving averages time to catch up, I think it's going to be setting itself up. I want to tell you, the last time they reported earnings, $4.62 billion versus $4.56 billion expected. This is early November. So they'll have another earnings report in February. Earnings $1.48. Let's put some of these graphics up from the company. So basically, this is a story of they're from 1890. It's a 130-year-old industrial business that used to be heavily reliant on oil and gas, that is now buying software companies and increase and buy. They bought National Instruments, and they just bought a massive software company that they already had a piece of, and they are transitioning to more and more robotics as a result and factory automation. Next one. This is just a look at gross profit margins as a result of getting more into software. And as a result of this shit is real. They have
Wow.
They have a
Look at those
CEO.
gross margins. That's amazing.
Dude, because the mix shift is changing. They're not selling heating and air conditioning systems. They're selling literally stuff to Amazon and other companies that need automation in their factories. So if you think, tight labor market, and you think like a lot of these forces that are causing the inflation are going to be with us for a while, this is one of the ways that companies are going to react to that. They're going to automate more and more of what they do, and that's not just hardware, that's software too, and this company is becoming a very serious player there. They have a CEO who took over in 2021. The outgoing CEO invited this guy into his office and said, you're a lifer at Emerson Electric. Tell us what we're doing wrong. And he laid out in a screed every single thing that's wrong with the company and that he would change. This company had been.
Where are you getting this from? Where are you getting this from?
I'm telling you a true story here.
No, but how do you learn about the story? You have daily sources.
Do daily, bitch. He delivers this screed to his own CEO and says, this is wrong, we should do this, we should do this. CEO said, I don't really agree with everything you're saying, but I feel like you're supposed to be the next CEO. He's been in the seat for almost 3 full years. And when you look at a chart back on.
All right.
You can see the street is now paying attention.
Let's see the
not
stock.
that stock chart. You could see this almost.
No, yeah.
Thank you. You could see the street is now woken up and is paying attention. So I'm not saying buy it. I'm saying put it on your radar.
Okay.
Because
I love it.
What's up.
I love it. Chart back on. I want to talk about this chart for 1 second. So there's that massive gap at the beginning of November. I assume that's earnings. But then there's a second gap higher. That is unusual. Super unusual. And the fact that it has not even come close to getting into that gap is super impressive. And this looks like a buy. Well done. Good pitch.
We're gonna let this thing marinate. Thank you so much, Michael. I'm sorry I said bitch.
Bitch. I didn't even hear you.
Oh, okay, good.
Just poof. No
good.
biggie. All good. Water under the bridge.
A mystery
all right.
chart for me.
I do have a mystery chart for you, Josh. Chart on, please. I saw Mike Zaccardi tweet this, and there's no way in the world that you're going to guess it. Although maybe you will, because it's a ratio chart of 2 companies that are diametrically opposed. One makes you fat, one makes you skinny. So that's a pretty good clue.
Okay, can I ask you what those numbers are on the chart?
Don't worry about the numbers.
No,
it's just a
are
setting.
they there to screw with me?
No.
Okay. So this is one stock priced in another stock.
Correct.
Okay. So I'm going to say, I want to say McDonald's, but it's probably not, is the denominator, right? Is that the right way to say it?
Yeah.
And the numerator is probably the stock that's going up, which would be Eli Lilly.
Yeah.
I got them both?
Yeah.
I am the smartest man alive. Chart on, please. I want everyone to get a look. This is what it looks like. This is what true stock excellence looks like, ladies and gentlemen.
I mean, I feel like every time I give you incredible clues, you act like you're the smartest man alive.
Were those really incredible clues?
I mean, I said one company's trying to make you fat, company's trying to make you skinny. Yeah, those
all right. Lilly was easy. Give it to me that McDonald's was not obvious.
That was good.
I could have said Hershey.
Yeah.
I could have said Yum Brands.
That's a good chart, though. Shout out to Mike Zaccardi. Good chart.
That's actually really interesting. They should chart that next to my weight and see what ends up happening.
All right, Josh. So in conclusion, I was fired up for the show because I knew we were going to have fun. I knew we were going to bring it. And the Jensen Wang,
what are you doing in Vegas tonight? What are you doing in Vegas tonight?
I'm going to Pappy's Steak.
You go Pappy Steak in the Fontainebleau.
Yeah.
I went to the one in Miami with my wife and kids. They had the best night of their lives. They had so much fun there.
Oh,
you know what the deal is, right?
I don't know the deal. Now I remember you going. I remember when
somebody's going to order.
Bullshit?
Somebody's going to order the $1,000 steak. They bring it in a gold briefcase. and like every waiter in the restaurant comes running over. The DJ takes over.
This $1,000 steaks, and Jerome Powell's lowering rates.
All right, ladies and gentlemen, thank you so much for tuning in tonight. I want to remind you, tomorrow is Wednesday, which means it's an all-new edition of Animal Spirits with Michael and Ben, my favorite podcast. Later this week, Ask the Compound with Ben and Duncan and me. I'm on that.
Oh, shit.
I'm on that, so look for that. And then the Compound and Friends at the end of the week. And once again, we have an awesome guest. Thank you so much for watching and listening. We appreciate you. Hit the like button. We're out.